You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Solana, Doge, and more. Cryptocurrencies and digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity, provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments throughout the world's leading crypto derivatives markets. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. Now it's time to dive into the exploding world of crypto derivatives. It's time for the Crypto Rundown.
All right, everybody. That music means we are back once again for the Crypto Rundown, the program here on the Options Insider Radio Network, where we go a little bit farther afield from our traditional stomping grounds of your Apples and your Tesla and your VIX and your SPY options and all that fun to see what's going on in the world of all things crypto. Going to talk the volatility, the unusual activity, the skew, all that fun, and a whole bunch more across a broad spectrum of products. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever-engaging, at least we tend to think so, Options Insider Radio Network. Remember, of course, if you want to go above and beyond the nearly dozen programs coming at you on the network, not enough to satiate you. We get it. We know there are a lot of hardcores out there, need a lot more content in your lives, and theoptionsinsider.com/pro, the place to go to learn more. Once you hit that button, listeners, once you hit that join button, there's over 200 hours, well over 200 hours worth of content hanging out there, closing in on 10 days worth of content available for you. The second you hit that button, you could binge for 10 days without a break if you were so inclined. Of course, you also get live access to everything else we do going forward, exclusive shows every week like Pro Q&As and Options Oddities. And of course, you get your name entered in the hat for our awesome Pro Trading Crate. Just gave away one last week. So all sorts of fun going on out there. theoptionsinsider.com/pro. Speaking of fun, it's time to kick it off here on the show as we roll out the Crypto Hot Seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everybody, welcome to the Crypto Hot Seat, the portion of the show where we welcome on guests from throughout the world of crypto derivatives and indeed beyond, and proceed to pick their brains for the benefit of you, the listener. And next up in the old hot seat, he's a newcomer to the program and indeed to the network. He is Josh Fraser, the co-founder of Origin Protocol. Josh, welcome to the Crypto Rundown program.
Thanks, Mark. It's great to be here today.
And Josh, as we are wont to do with all of our first-timers here on the show and indeed on the network, Why don't you go ahead and give our audience a bit of an overview of your background in the financial and indeed crypto space, as well as what it is you folks do at Origin Protocol.
Yeah, so Origin has been building in the crypto space since 2017. And today we have products that are focused on two of the hottest categories in crypto. We have Origin Story, which is a platform that helps creators launch NFTs in this space. We've worked with top creators like Paris Hilton, big brands like SpaceX, and also hot projects like Pudgy Penguins, which are using our marketplace software as a custom place for people to trade their NFTs. And then we have Origin DeFi. You can think of it as the easiest way to earn yield in DeFi without any of its hassles, which are typically associated with yield farming. And so we have two main products on the DeFi side. We have Origin Dollar, which is a yield-bearing stablecoin that's backed by DAI, USDT, and Tether. And then just 3 weeks ago, we launched this new product called Origin Ether, which does the same thing but helps you earn yield on your Ethereum. So if you're bullish on Ethereum, you want to participate in liquid staking tokens, you can do that with ETH. Just launched 3 weeks ago. It's already grown to $22.5 million of TVL, returning 9%, 9.18% APY. So it's off to a great start with that product as well.
A lot to unpack there. You guys have been making headlines, though, in the NFT space, and you started there. I think we have to start there as well.
Sure.
First off, kudos for managing to make some money off the sale of Charlie Bit My Finger. One of my son, when he was little, as one of his favorite viral videos, used to watch that all the time. He thought that was just hilarious, that video. So congratulations on cashing in on the Charlie Bit My Finger craze. But, let's talk about it.
That was a fun one.
You said you guys have been around since 2017. Now, the NFT space, a little bit newer evolution of the crypto space, not without its controversy. We'll get to all that fun in a second, but let's start with that evolution side of the story. You guys have been in it for a little bit now. How have you seen the NFT space particularly? How have you seen that evolve since you guys launched over there with Origin back in the dark days of 2017?
Well, we started off in a very different place, trying to build decentralized marketplaces for anything. Quickly realized that it made more sense to focus on digital assets, and that's when we started focusing on NFTs. And then we kicked it off with the sale. The first NFT sale we did was with a guy named Justin Blau, a DJ, and the sale did $11.7 million, which was the largest NFT sale up to that point. It was also, and to this day, it's the largest music NFT sale that's happened. But this happened in the height of COVID, when most artists were stuck at home, not earning any money. And here is this DJ that, most people hadn't heard of, that had suddenly brought in, this amazing amount of capital by tokenizing his music. And so this is really, if you look back, it's really the moment when NFTs entered the mainstream consciousness. As people, realized, and a lot of other creators and artists started paying attention to the space and started calling us up saying, hey, we want to learn more about NFTs. Can we work with you as well? So that really opened the floodgates. I was working with people like Charlie Bit My Finger, working with lots of other DJs, people like Don Diablo, Ryan Tedder from One Republic, Bassjackers, and so on. And so we're right there at the beginning as NFTs were taking off. And, we continue to be bullish about the long-term potential of these assets, particularly as we think about how we can bring these, bring real-world assets on chain. More recently, a good example of what this looks like is with Roofstock. They're a unicorn company in the real estate business, but they're actually tokenizing homes, and you can actually buy a home as an NFT. We've actually facilitated the sale of 2 homes so far this year, where basically the title of the home is to an LLC, and then that LLC says whoever owns this NFT is the legal owner of this home. And so it really streamlines the process and brings it to where you can just, you can buy a home as an NFT in just a matter of seconds right there on the blockchain. And compare that to, the process of going down to the courthouse and looking for a stack of papers to see if there's any liens against the property, how painful and tedious that process is. And now we're getting a glimmer of what it can look like in the future, when all of these assets can be digital on the blockchain. You can imagine being able to take that NFT and then take out a loan in DeFi with that, or trade it or fractionalize it. The opportunities here are really quite endless.
I saw that. I saw the roof stock selling homes as an NFT. It's just mind-blowing, the different potential use cases that are out there. But, as I mentioned, it's not without its controversy, the NFT topic. We always have to tread carefully with it on this program. We have a lot of guests when they come on. They, let's say, have varying opinions of the NFT space, especially, let's say, a couple of years ago when we saw NFTs were all the rage, kind of stealing all the headlines, the Bored Apes, all that kind of stuff out there, really stealing a lot of thunder, a lot of interest, and a lot of people who were coming at it as crypto natives and who were looking for some other products that they thought were more impactful to get some headlines, get some market share, get some capital attracted to them. They thought NFTs took away from that. So what do you say to those folks out there who say, NFT marketplace kind of was a fad, it's done, and it stole thunder from, let's say, quote unquote, legitimate projects out there in the crypto space?
I think the market decides these sort of things. Who am I to say? There's a lot of things in this world that I don't fully understand why we get as much attention as we do. But that's how things work. I think a lot of times we see this trend in technologies in general, which is, the first version seems a little bit silly or a little bit of a toy. And certainly the PFPs, I think it's easy to sort of laugh at, people, spending hundreds of thousands of dollars on a JPEG monkey and saying this is silly. But you can do that and completely miss the fact that this is a revolutionary technology that can be used for digitizing multi-trillion-dollar markets. And so, I would encourage people not to miss the opportunity just because the first iteration of it seems a little bit silly and a little bit like a toy.
Are you saying I shouldn't have put my entire kid's college fund into some Bored Ape NFTs? That was a bad trade there, Josh?
No, we'll have to see. We'll have to see when your kids are at college age.
Hey, nothing wrong with community college. That works for everybody out there as well. But you're right. If you can see some more of these applications that provide demonstrable utility. No one likes the closing process in real estate, right? If you can get all that done with an NFT, I think that might actually turn some heads out there. I know only 2 houses have changed hands that way so far, but if we could speed up that process, maybe reduce some of the paperwork and just the soul-sucking nature of closing in real estate, that alone might be worth keeping NFTs around there, Josh. So there we go. We have discovered the hidden use case area. But let's keep on rolling. You mentioned some of the other projects and products you guys have over there at Origin Protocol. Another area, stablecoins also in and of themselves, not without their controversy. We saw, of course, the eruption of Luna and Terra, all that fun not too long ago out there in the space. That seemed to have spooked some people away from the stablecoin space. You folks over there at Origin, though, clearly firmly entrenched in that space. You mentioned the new addition you just launched, providing some revenue on ETH. You also have Origin Dollar out there. So an intriguing space. I guess you guys like the contentious and or controversial sides of the crypto space, Josh, because what are your thoughts there as well? Some folks maybe having washed their hands of stable coins post Luna and Terra, and you folks still firmly entrenched there, sir.
Well, for quite some time now, stablecoins are just proven themselves as having a lot of utility. Way more value is transferred every single day using stablecoins than over Bitcoin, for example. Because you get all the benefits of cryptocurrency. In fact, there's 24/7, it's global, low fees, but you don't have to deal with the volatility. So there's real utility here for using stablecoins. And again, the market has spoken and said, hey, these are really useful assets to hold. Now, problem is when you're holding stables in your wallet, you're not earning anything. Your money's sitting idle, and you're not earning. And so Origin Dollar was kind of tackling that problem of how can we have something that is useful as a stablecoin. It's stable. It's worth $1. It can always be redeemed for $1 of underlying assets, but I don't have to give up that yield. And so the way it works is it takes you deposit stablecoins in, it deploys them into DeFi strategies, things, protocols that have been battle tested with hundreds of millions of dollars or billions of dollars, things like Compound, Aave, Curve, anywhere you can earn a yield in DeFi, and then automatically takes all that interest or the trading fees that are accrued and then swaps them back into stables, and then it automatically compounds right there in your wallet. So you have something that's always earning for you, and it's also like easy to spend just like any other stable coin. And then, the new product we just launched, Origin Ether, works exactly the same way. We also think of it as a stable coin. It's just stable to a different currency. So it's stable to ETH instead of stable to dollars, but fundamentally the same product. Both have been, battle tested with hundreds of millions of dollars of capital, and Origin Dollar has now been online for a couple of years now with no issues. So, security, of course, is always a top concern for everyone, and that's certainly our top priority as well.
The hunt for income, a very important, very hot topic right now out there. Of course, you can go on the sidelines in cash and collect somewhere around 5%, depending on the product out there. So that makes income even more difficult to come by in some of the traditional markets. Also, volatility getting lower. So for a lot of our audience who come from the options side, use options selling to generate income. That makes it a challenging environment. In fact, listeners, right now, that is our question of the week. You go follow us over there at Options. You can vote along on our question, which is quite simply, vol is down, rates are continuing to go up, which makes cash more attractive all the time, and raises the question, are you still selling covered calls in this environment? You say, yes, you're just selling them closer to the at the money, or yes, I'm okay with less income, or no, this is too much risk right now, I'm in cash, or no, there's not enough income for me. So get out there at Options, make your voice heard, listeners. But Josh, that brings us to that question. It's an intriguing time to be offering these income generation products, because there are competitive alternatives right now just sitting in cash without any of the risks out there. So what kind of demand are you seeing for these staking and income generation products right now, given all the other factors I mentioned going on in the market right now?
Yeah, for Origin Dollar, it's certainly been a challenge for us. Could not have predicted things would be this way, where you could earn such a good yield just holding money in U.S. Treasuries, and it's been a challenge for Origin Dollar, but the yields are lower in DeFi than they are in traditional finance. What we're starting to see are those yields are coming on chain, and so we're having multiple companies that are issuing T-bills and as crypto assets, and so I think we're going to start seeing these rates come to parity, and so some of that yield is going to make its way onto the blockchain, and then the goal there is how do we stack yield on top. For Origin Ether, a little bit less headwinds, a little bit more tailwinds here, where we're able to take the native yield from native staking on Ethereum. So you can get 5 or 6% native yield from what are called liquid staking derivatives, and then we can take those, deploy those into DeFi to earn additional yield on top. So you're able to stack that safe yield with a little bit of extra DeFi yield on top, and then all of that just automatically compounds in your wallet, so you don't have any work to do. But yeah, you're absolutely right as far as the being a very interesting time for both of these products.
The old Chinese curse / blessing made you live in interesting times, right? We're all doing that right now. But you guys talking about the staking, that's an intriguing area. Any concerns from you guys on the regulatory front? We saw the SEC not really huge fans of staking, in fact, coming for Coinbase last week for products along those very lines. So any regulatory concerns there, Josh, that maybe the SEC might start cracking down on the whole staking space?
Well, we've certainly been coming after a lot of companies in the space. We've been fortunate not to have been targeted, and we've done everything we can to, stay within regulations as we understand it. We've spent an absolute fortune on lawyers who've helped guide us along the way. But yeah, this is something that needs to be sorted out, as there's still a lack of clarity on how to do this in a compliant way, and it's not clear if their intent is for companies to do this in a compliant way, or if they just want to kill crypto altogether. Sometimes it seems like that is more of their objective than to help these companies provide these services. For us, it's all about how do we do things in a decentralized way. We're not taking custody of the funds. We're simply writing the code. It's all there on the blockchain. You have full transparency exactly where the funds are. And all of this is governed by token holders. So we're not even, in control of these funds. You're trusting some code to manage that safely for you. So, we feel very confident in our position and what our lawyers have told us as far as this goes. But, a lot of open questions as far as how it's going to play out in the courts and in Congress over the coming months.
How nice would it be if they would just maybe put out, here's what the rule is, as to having to wake up one morning and you get a letter from the SEC and, that's when you find out you're not in compliance. You're right. A little clarity could go a long way in this front. But speaking of the regulatory side, we talked earlier about the evolution of NFT, but in the last year and even in the last month, we've seen a lot of evolution on the regulatory and indeed on the DeFi side. As a result, of course, last year, the infamous meltdown of FTX spooked a lot of people in the traditional finance world, really. Kind of spooked them on some of their concerns they had. They kind of reinforced their negative stereotypes of crypto. Look, it's unregulated. It's the Wild West. So it kind of drove them more into the centralized, regulated markets and environment. Then, of course, there were a lot more of the crypto natives who said, see, this is a good example of where we really need more decentralization. We had a guest last week who referred to them as the two guys in the room. You got to get the two guys in the room out of there and out of the way, and that could remove a lot of the limitations and a lot of the trust factor that you need in this space. So you guys have been active in the DeFi space for some time. What kind of evolution have you seen, especially over the last year post FTX? And I suppose we could throw in over the last couple of weeks with Binance here now, Josh.
Sure. Yeah, I mean, one of the most obvious trends is just that, watching on chain, you can see a mass exodus of funds from centralized exchanges and into self-custodian wallets. It's actually, for those of us who have been talking about the importance of decentralization for a long time, this is great to see. Along with that, we're seeing trading volumes on decentralized exchanges such as Uniswap that are continuing to grow steadily. I think we're doing more volume on Uniswap than Coinbase now, so that's a pretty big milestone that they've hit. And then one of the other things that's really stands out in the DeFi space is the rise of derivatives platforms for options trading and other types of ways of getting leverage. Decentralized alternatives for the types of offerings that FTX had. So we've had, we've seen products like TMX that have been exploding in popularity. People are obviously interested in these sort of exotic instruments, and we're starting to see all of these type things pop up in DeFi now.
We do love a good crypto options exchange. We've had many of them on this network and on this show over the years. So yes, the more the merrier as far as we're concerned. We touched recently just on the staking side. That's obviously intriguing. The income generation process, very intriguing for a lot of our listeners right now. But outside of that, you guys have been operating the DeFi space for a while. Any other intriguing, let's say, trading strategies or ideas you've seen come across your desk or that you've noticed going up right now in the DeFi world that you think might intrigue our listeners, Josh?
Well, I think leverage is certainly an interesting one to talk about. Particularly people, we're seeing people doing looping on stablecoins, and we're seeing people doing looping on, staked ETH, for example, where they basically, they use their staked ETH as collateral, and then they go and they borrow more ETH, and then they use that to mint more staked ETH and loop that around and around. You can do the same thing with stablecoins and earn a yield. And so that's always, one of the more interesting things that you can do in DeFi, particularly as there's a lot of incentives being offered by these platforms that are providing a lot of that yield. So you're able to, earn the reward tokens that these protocols are giving away to incentivize growth. And so that's if you're looking for more yield, you're comfortable with the liquidation risk if something depegs, that's certainly an interesting one to look at.
There we go. Leveraging the staking. No chance the SEC might come knocking on that down the road or anything along those lines. You're just waving a red flag at the bull there. But intriguing. I can see how people might want to turn that direction given what we mentioned earlier, low volatility, not a lot of income to be found yet in the crypto space. You might need a little bit of leverage to juice up those returns a little bit. Well, Josh, I appreciate you taking some time out of your day to join us here on the Crypto Hot Seat. We have to keep rolling with the rest of the program. But before we do that, we like to leave our audience wanting a little bit more, Josh. So before we go, if there's anything you and the team over there at Origin Protocol have up your sleeves that you think may be interesting or intriguing for our audience, you want to leave them with a little bit of a hint, a little bit of a tease. Now is the time, sir. The floor is yours.
Yeah, so you'll want to watch the space with what's coming for Origin Ether. Again, it's only 3 weeks old and already has $22.5 million in it. It's growing, $1 million a day current rate. And there's some new stuff up our sleeves as far as new yield strategies, ways that we can increase the yield even higher than it is right now at that 9%. So keep your eyes on that as we're working on a lot of interesting integrations that will allow you to take this asset and use it in lots of interesting ways in DeFi. So check that out at oeth.com.
Fascinating stuff. And where should they go again, Josh, if they want to learn more?
oeth.com. So that's oeth.com to learn about Origin Ether, or ousd.com to learn more about Origin Dollar.
There you go. Thanks for taking the time, Josh. And we'll check in with you guys again down the road, see how all these new implementations, how they're unfolding in the marketplace in the coming months.
Thanks for having me on. This is great.
All right, listeners, now it's time to keep on rolling. It is time for the Bitcoin Breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, listeners, welcome to the Bitcoin Breakdown. By the way, you like that? You like looping? You're staking out there on your products, getting some leverage out. I can see why you might want to do it. I could also see why maybe the SEC might raise an eyebrow at such things. But an intriguing thing, you got to do what you got to do at the end of the day to get some yield, right? That's what our question of the week is all about. But now it's time to break down the week that was and indeed still is in the world's leading crypto asset. We're talking about the big dog, which is Bitcoin. And it's roughly the same as it was this time last week, a little bit bigger, but nothing to write home about. The end of our last show last week, it was 25,612 coming into the start of the show. Today, we were at 25,826. So a whopping 214 handles north of where we were this time last week. Of course, in between, we did a lot of living, most of it on D-Day last week, June 6th. Bitcoin, quite the roller coaster day last Tuesday, where we saw it hit the low for the week of 25,525. And then a few hours later, not quite 12 hours later, I hit the high for the week of 27,240. So a heck of a lot of living done in the span of just 12 hours. And then the rest of the week kind of vacillating. Of course, all this data we're going to break down right now, listeners, coming at you courtesy of our friends over there at Amber Data. Check them out, amberdata.io, amberdata.io. The place to go to kick the tires and light the fires out there. If you did that, you would see that Bitcoin vol, maybe just as a result, still a little bit of a holdover of what we saw, that massive move last D-Day, last Tuesday. We're seeing vol a little bit frothier, a little bit higher than it was this time last week, which is good because the vol was starting to get pretty anemic out there. On our last show, we were at 36 and a quarter. If you know anything about Bitcoin vol, that is pretty darn low. That's somewhere around the first percentile for 52-week volatility. So getting pretty low out there. This week, a little bit higher, 4140 when we kicked off the show. That's, of course, front month vol, 30-day vol. Let's go a little bit farther out. Let's go down the term structure a little bit. Let's go out, let's say 6 months. Let's see what the calmer, cooler, more collected heads have to say. And last week, that vol was a little bit frothier, 42.5. So quite a discrepancy between front month vol and 6 month vol. Last week, this week, they have kind of caught up to each other. We're at about 43 and a quarter in 6 month vol versus 41.40 in 30-day vol. So that little blip we had last week, maybe a little bit of an aberration. We shall see. Let's get out to the skew front. On our last show, it had swung negative. It was about a -2, slightly more than that, -2.05 to be precise. Coming in to start the show today, even more negative, -3.15. That's the 30-day skew. And we were talking a little bit on the show last week about the weekly skew, the 7-day skew. I thought that was an intriguing data point. So let's throw that into the show this week as well. It's a -6 right now. So the weekly, the very near dated skew out there, very heavily biased towards the downside right now. So a very intriguing out there. We all know in equities and many products out there, a lot of the trading volume is in that front week now. So might be intriguing and worthwhile to start including that 7-day skew. So I think we're going to start doing that going forward as well. Let's go the other way now. Let's go a little bit farther out. Let's go 6 months out on the skew. Let's see what those calm, cool, and collected heads have to say. And last week, the skew was pretty much flat, slightly negative, almost -0.5. Still mostly flat. Coming into the start of this show this week, a little bit positive, swung in the other direction, about 1.3. So intriguing. Talk about polar opposites. The very near-dated portion of the curve, the 7-day skew, a whopping -6. You go out 6 months, a little bit north of 1, about 1.3, almost 1.5. So two interesting, little bit different outlooks there. Let's go out to the open interest. Let's see what's open out there on Deribit. And in fact, the folks in Deribit are going to be joining us on the show in a couple of weeks. So that should be intriguing. But right now we have exactly 200,000 calls open on Deribit. It's up about 6,000 from this time last week. And the puts up to about 93,000, up about 3,000. Not a huge evolution on the OI front. Let's keep rolling now. Let's see what kind of evolution we did see, though. Let's drill down a little bit farther, see if we see any interesting changes from a size position perspective. What are the biggest movers and shakers we have out there from an options position perspective this week? And let's start at the bottom and work our way up. Number 5, listeners, we have the 29,000 strike calls. They gained a whopping 2,000 contracts this week. This week, all gainers again, so that's kind of interesting. Not all calls, though. Number 4, the 31,000 calls. They gained 2,300 contracts this week, so modest gains here across the board, nothing explosive. Number 3, we have the 25,000 puts, so there were some puts sneaking in there. And again, if you listen to that range I broke down earlier, last Tuesday for most of it, that 25,000 put makes some sense. They gained about 2,400 contracts this week. Number 2, we have the 30,000 calls, the 30,000 strike calls. They gained 3,100 contracts this week. And the big dog, the big gainer this week, the 24,000 strike puts, so below that 25,000 level, they gained 3,400 contracts. If I went back and looked, I'd have to wager a lot of that came during that morning last Tuesday when maybe a lot of folks thought we were falling out of bed again. So intriguing stuff out there. Did you have the 24,000 puts in your bingo card for this week, listeners? Intriguing stuff. Let's get on out to your product. I know a lot of you like to trade, but for many of you, this is your proxy for Bitcoin and for crypto in your securities account. It is BITO. When we kicked off the show, it was mostly hanging out unched from last week. It was at 14.5, up about a quarter. In terms of the average daily volume, not a heck of a lot of evolution there, listeners. It was 33,000 on the show last week, and guess what? This week, a whopping 33,000 contracts a day again. So no change there. Doesn't seem like today is going to be the one that breaks the mold as well. Only 18,000 contracts on the tape right now. So not a lot of paper going up out there today. Vol-wise, we are seeing it come in a little bit again. It was at a 41.5 when we kicked off the show, down 1.5 points again. So currently it is not in the first percentile for 52-week vol. It's actually in the second percentile. So vol still pretty anemic across the board out there. That gets back to what I was talking about with our guest earlier and all this staking and income generation. That becomes much more challenging in this environment where volatility is in the first or second percentile for the year, listeners. You're not getting a lot of income for selling or in staking those products out here. You're not getting a lot of income in the options world for selling those options. So it makes it challenging. It makes people look for alternatives from an income perspective. That's where they get to other things. Maybe they go to cash because they don't want to deal with the risk. Maybe they get to what our guest was talking about. They start stacking and leveraging those products, which has its own risks with it. So a lot of intriguing things to be found. Let's see what's intriguing out there right now from a size position perspective in BITO. See if we can find any intriguing nuggets, any diamonds in the rough. It costs you 15,400 contracts to break into the top 10 in BITO. That gets you to the Jan 2025 20 calls. Intriguing number 9, 15,500 of the Jan 2024 20 calls as well. So the 20 strike drawing some fascination in January for the next couple of years. Number 8, by the way, we have 8-2 calls over puts in our top 10. Number 8, we have our first of 2 puts, 17,600 of the June 5 puts, followed by number 7, 20,000 pretty much exactly of the Jan 2024 18 calls. Number 6, our second of 2 puts, 25,000 of the June 8 puts expiring at the end of the month, so the June end of month 8 puts. Number 5, 26, almost 27,000 of the Jan 2024 15 calls. Number 4, 30,000 of the Jan 2025 35s. Number 3, 35,000 of the Jan 2025 25s. Say that one 5 times fast. Number 4, 42,000 of the Jan 2024 65 calls, 6-5 listeners. And the top position yet again this week, 48,000 of the Jan 2025 30 calls. So a lot of long-term upside baked in to good old Bitto. Is that all overriding? Is that the bull starting to creep back in and loading up to the upside? Do you like those positions, listeners? You like the 30 calls in January of 2025? If you load up on those, it gives you a lot of time. You also don't get a lot of bang for your buck over the next year and change. So if Bitto does rally, that Jan 2025 30 call, not going to do a heck of a lot for you. So it's an intriguing choice. You could argue there are better ways to get a long-term upside position if that is what they are going for. If they are overriding that and trying to generate some income, kind of the same deal. You're not going to get a lot of income from that until that position is getting closer to expiration. So it's an intriguing choice. Let me put it that way as we keep on rolling right on into the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, let's do it. Let's explore the altcoin universe, see what mysteries await us this week. Let's start in our top 10. And you know what, listeners? Got a little bit of a shakeup here in our top 10 this week. Wow. Some names kind of falling out of bed this week. Number 10, we have Solana, all the way down at number 10, knocking some like Polygon and others we've been talking about for a while out of the top 10 from a market cap perspective. Solana coming in, but still shy of 6 billion, 5.9 billion. We were at somewhere between 8 and 10 billion to break into the top 10 for quite some time. So a little bit shy of 6 billion now. That's quite the fall in terms of the floor to break into the top 10 from a market cap perspective. Number 9, listeners, I'm talking about this one in quite some time. This is Tron making it on the list again for the first time in a while. 6.3 billion worth of market cap. Number 8, it's almost like a broken record now. Doge is just glued to the number 8 spot. Nothing can seem to dislodge it. 8.5 billion worth of market cap. That used to be enough to just barely break into the number 10 spot. This week, good enough for number 8 and keeping Doge locked firmly. Its death grip still intact on the number 8 spot. Number 7, Cardano, 9.5 billion. Number 6, XRP, 26, almost 27 billion with the market cap. Number 5, USD Coin, 28.3 billion. Number 4, good old BNB, 35.8. Number 3, it's Tether, 83.3 billion. Number 2, ETH, 208 billion. And number 1, the big dog, Bitcoin, hanging out pretty much exactly at $500 billion, just a little bit north, 501 billion. To be precise. So intriguing stuff there for good old Bitcoin. But you're not here to talk about Bitcoin right now. You come into the altcoin universe, you probably want to talk about ETH. ETH coming in to start the show a little bit lighter than it was this time last week, as evidenced by those numbers we just broke down in the top 10. It was at an 1807, almost 1808 at the end of our last show. And coming in to start the show today, 1736, down about 71 handles on the week. It's not a heck of a lot of Not a huge move for ETH, but nothing to sneeze at either. In terms of range, not the biggest range this week as well. We saw ETH get as low as 1731. That was Monday, not Tuesday last week. That was a Monday. I should take it back. That was yesterday. That was Monday of this week, so June 11th. So 1731, the low this past Monday. And the high came, no surprise, last Tuesday, D-Day, 1892, almost 1893. Right now, we're kind of hanging out close to where we were this time last week, a little bit below, which probably explains why we're not seeing a lot of evolution on the volatility front right now. The front month vol was a 43 on our show last week. and a 43 this week. Again, if you know anything about ETH, structurally more volatile than Bitcoin most of the time. So if a vol in the low 40s is pretty low, it's in the low percentiles, first, second percentile for Bitcoin, then you know it's even worse, even more stark for ETH. It's been kind of hanging out here, can't really seem to budge. That said, we are heading into the summer months here, listeners. Not usually known as a rock'em sock'em high volatility moment for the markets. So some of that could be playing out in the crypto space as well. Let's go a little bit farther out on the chain. Let's go out, let's say 180 days, listeners. Half a year. Last show, we were a little bit shy of 40 from a vol perspective, 39 3/4. Kicking off the show this week, a 43. So a little bit juicier, 6 months out. The front portion of the curve, not doing a heck of a lot. Let's get out from a skew perspective, see what's cooking there. Getting a little bit more negative out there in ETH land, which is interesting. It was negative 3.7 on the show last week, negative 5.25 this week on the 30-day skew. If we go out 180 days, it was negative 1.5 coming into this week. It is now exactly flat pretty much. So no bias in any direction out 6 months. If we go the other way, let's go all the way out to the front week skew, listeners. That was almost a negative 9, negative 8.65. So the weekly skews in both Bitcoin and ETH looks like they're preparing for things to fall out of bed a little bit over the next week or so. We'll see if that comes to fruition. Again, skew is not always a precise crystal ball, doesn't exactly predict the future, but it does show, at least for right now, the near-dated bias, the near-dated concern from a volatility perspective in both Bitcoin and ETH is to the downside. So read into that what you will, listeners. In terms of OI, got some paper flowing in on the ETH front this week. Calls 2.17 million open on Deribit. That's up 170,000 from this time last week. The puts up to 825,000, up about 80,000 out there. So a little bit shy of the 3-to-1 level out there, calls over puts right now on Deribit. In terms of the top OI movers and shakers this week, let's go dig them up, see what we can find. Number 5, we have the 2,500 calls. So pretty substantially out of the money calls. They gained 24,000 contracts this week. Again, it was all gainers this week, no big losers. And also a mix of calls and puts. Number 4, the 1,700 puts are going right back in the other direction, listeners, and also pretty close to the at-the-money put right now. So it makes some sense that'd be on our list this week. They gained 36,000 contracts this week. Number 3, we have the 2,000 calls, so a nice round psychological number. Makes sense why that would be on our list. They gained 52,000 contracts this week. Number 2, getting back up there again, the 2,300 calls. They gained 60,000 contracts. And the number 1 big dog OI gainer this week, listeners, from an ETH options perspective, the 1,900 strike calls. They gained 81,000 contracts this week. So that's intriguing. Looking at our range for the week, we just kissed it. We didn't quite get there. We got to 1892, almost 1893 on Tuesday. So that might explain why so much paper was flocking into that strike. It was pretty much the at-the-money strike for a brief period. Maybe that inspired some optimism or trading furor out there in some folks. Either way, intriguing stuff to be had out there for the big movers and shakers in ETH options. Let's go run through the rest of the altcoin universe and we'll get out of here for this week, listeners. We also had Solana falling out of bed this week, listeners. Just a rough go for Solana. If you listen to the show, listeners, you know that we took it out of our rotation on the show after all the madness that went on with FTX. And we used to even talk about the options, which were trading pretty aggressively until, of course, FTX took them to the cleaners. They dropped below $10 at the beginning of the year. Now it sounds like the SEC trying to broaden their definition of a security, wrapping a lot of the names you might watch in the altcoin universe into that definition, including Solana, including Cardano, and including Polygon. Hence this evolution we're seeing in the market cap as a lot of them got crushed as a result. Solana, no exception, 14.95 when we kicked off the show, down over 5 handles. So quite the drubbing. They're all pushing back. The Solana Foundation saying we are not a security. Is that enough? Are they going to be locked into the same limbo, the same purgatory that XRP has lived in for years now, where they're trying to prove that they're not a security, but no luck? That's Never a good thing for an asset you want to hold over the long term, or even you want to trade. It's just going to be locked in this limbo. That's never a good thing, listeners. That's what we were saying with our guest earlier. We need some sort of clarity on this front. So you can't just put out enforcement actions and hope to set the table that way and establish the guidelines that way. You need to set the guidelines at the outset. Here's what you need to do. Here's what you shouldn't do. And then people can operate accordingly. If they don't know, they're just firing blanks in the dark and hoping maybe it works out, maybe it doesn't. Weirdly enough, XRP, maybe because they've just suffered these slings and arrows many times, actually rallying a little bit this week. It was 50 cents, pretty much even on our show last week. 51.8 this week's up nearly 2 cents this week. And everyone's favorite Doge taking a bit of a break, 6.6 cents last week, 6.1 cents. This week, Litecoin also taking a drubbing this week, 87.16 on the show last week, 76.43 this week, down almost 10 3/4 on the week. We mentioned they're coming for Cardano as well, 34.9 cents last week, 27.4 this week, down over 7, about 7.5 cents. Polkadot knocked out of our top 10 this week, 504 last week, 451 this week, down about 53 cents. And let's go everyone's favorite Shiba, because why not? It was 0.000079 last week. This week 0.0000066. So could they possibly even be coming for Shiba, listeners? Say it ain't so. All you out there hoping for the Shiba Lambos. Unfortunately, it doesn't seem like it's going to come to pass this week. All right, listeners, that music means we've come to the end of another epic journey through the world of all things crypto. I want to thank our guest, Josh Fraser, the co-founder of Origin Protocol, for joining me on the Crypto Hot Seat. You want to check out more from all of them. Of course, you can always follow them on Twitter as well, at Origin Protocol, all one word. And of course, if you want to sink your teeth into this and much more data, we really just have time to scratch the surface on all the data offerings they have over there. Only one place to go, listeners, amberdata.io, the place to go to kick the tires and light the fires out there. Tell them we sent you. They'll be very happy to have you on board. Back again throughout the rest of the week with our usual array of content for all of you out there who are still a little bit new to this options thing. Options Bootcamp coming at you every Education Wednesday. Of course, you can go find it on the podcast front as well and go back all the way over a decade, well over 100 episodes, to really explore and expand your knowledge of all things options. It's a great show. I do recommend it. Even we are not biased at all here. A lot of you folks agree. Clearly, the numbers don't lie out there. So Options Bootcamp, good starting point, I should say, for a lot of you looking to learn about all things options. Back again on Thursday for the option block, as well as This Week in Futures Options. If you want to hear some of the listed side of the crypto space, what's going up on CME and ETH and Bitcoin, we touch on it on that show on occasion. Then Friday, volatility views, and then, of course, options oddities for all of our pro members. And then back again in 2 weeks. There's a holiday next week, so don't blame us. Markets are closed. Back again in 2 weeks, another episode of the Crypto Rundown. Stay safe out there, everybody.
The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.